Hello traders, this is Michael Huddleston with the Inner Circle Trader Pro Traders Club entry for August 8th, 2011. Okay, just a real quick note. Thank you very much for your birthday wishes. This is actually a revamp of last night's intended video. I believe the video was too long and I waited a considerable amount of time for it to actually format and be finished with YouTube. But I think I was over their limitations, so I'm going to try to make this one brief and still cover the salient points. So we are looking at a cable chart. Obviously, we're looking at today's activity, so I can't hide it. I guess I could, but I'm not going to go into the effort of hiding. Everybody knows what happened today. So what I did want to cover was Friday leading up into this mess we have here. Okay, so let's take off the pivots. Okay, and we are looking at Friday's action. Okay, non-farm payroll. Then we had a gap opening on Sunday. All right, let's take this period separator out. All right, this is your bare bones cable chart, and obviously we're looking at a 5-minute chart simply because it allows me to show you all of the price action across the entire spectrum of the day. Okay, so Friday's action here leading up to a gap opening on Sunday. So there was an absence of trading for us as retail traders in here. Okay, and whenever we have this void of action, price will tend to try to pull back into the gap. Now, where is the gap? How do we define the gap? That is a question that comes up pretty much in my email box whenever I'm referring to a gap, or if I'm responding to a poster's mentioning or comment of their own concerning gaps. Alright, right in here, since this is the highest high, and this is essentially where we closed out on Friday, okay, and here is the opening. Alright, we're going to zoom in. And this may be a little bit difficult for you to see, but I have an open high-low close bar in here. Here's the opening tick to the left of the bar. So we're going to put the line right there. Okay, and that's going to denote the Sunday gap. And let's take this shift off on the chart so it doesn't keep rolling back on me. Alright, so basically we are looking at a level of 164.64 and 163.95. Okay, pretty considerable gap. Okay, so now we have an extreme gap on Sunday. Okay, and generally what will happen is this price will try to come back and fill this gap, and it'll come down to at least this to be considered full filling of the gap. Okay, I like to use 80% of the gap. Okay, which is about where we faltered right in here before we started to see this move up in the cable. And eventually, yes, we did get down and close the gap, and then shot up going into Frankfurt and London Open. Then obviously we fell off the table. Okay, so that's this was the cable. Now, while this did have a tradable gap to use for the Asian session last night, I discussed last night in live chat, not that we were really going to have a live Pro Traders Club, but I just really poked myself into the Baby Pips chat room just to let everyone know that it wasn't going to be a live Pro Traders Club, but turns out we had a town hall meeting about the gap that may or may not appear on your charts, but does exist in the Forex market on Sunday's opening. Alright, so we have the extreme gap here as well. Okay, and let's delineate. Where those levels are. Okay, now you may be asking, why am I not using the actual close of Friday? Well, simply because I want to use the high in here, because that's just the way I trade the gap. You can use the close price on Friday, but you may not get that actually in the filling. Okay, so I like to use the high. Now, obviously, if the high was up here, I would just move it up, respectively. But this right here shows us a nice filling on the gap. Now, when I trade the Sunday gap, what I'll do is if we have an extreme gap like this, this action right here, immediately I'll fade right from the opening, because number one, everyone's going to be looking to take profits. If they happen to be long on Friday, they're going to look to try to bank profits. When you have over 100 pips gap, there's a huge emotional draw for people to try get all that profit out immediately and run to the hills. So you can see that happening in here. And let's cover what goes on through the various groups in the market at this time frame. Number one, we have the smart money accumulating in here. Okay, so they accumulated the fiber going into non-fraud payroll, and also, if you remember, after Friday's close, S&P came out with a downgrade on the United States credit rating. So just as I suggested in previous videos and commentary, the market is going to engineer a rally, and they'll accumulate positions, and then what they'll do is, all in here, okay, you have all these people trying to short and go fade, these rallies, trying to sell, and all of a sudden they just keep punishing it, driving it higher and higher and higher, and then at the close, folks that are in this market trying to catch a high will be punished on Sunday's opening. The extreme gap up here, so they're crushed if they're short here, and the smart money that's net long from the optimal trade entry in here will look to take and sell into this right here. Now, there's two classes of street money that's going to look at this gap. One, the real neophytes are going to say, wow, look at this, price is really shot up, it's probably going to keep on going, let me just buy it right now, and they get punished. And the smart money will gladly sell that to them as they distribute what they've accumulated here. Okay, so basically we're looking at over 400 pips move in just essentially one day, because there is no trading until Sunday's gap opening for retail trading. So that's a considerable amount of trading for what we considered a one-day event. So what I suggested in the chat room, and hello, goodbye, or Wade, this is one of the comments I suggested in the live chat room that I was doing on my chart, not necessarily what people should do as a trade, because again, I'm not a CTA, I'm not licensed, I'm not giving you trade advice, guys. I'm just giving you an outward thought process, basically. Let's call it that. Okay, so if you do make money with this, congratulations, but don't credit me. You put the trade on, not me. And if you lose money, I don't want to hear about it. So here's the swing down. Okay, we filled the gap. All right, and we were talking about how this could set up a London opening trade, and I suggested that folks look at the 143.80 level, and let's put that in the chart right now, and it essentially falls right there. That's the institutional level. Okay, and I was talking about it in here, and then price ran up, try to trade it back down, and I'll cover this low here also in a moment. But price went right up into the institutional 143.80 level. Actually went up to touch the 144 figure, but the 79% retracement level on our optimal trade entry parameters basically contained the price and gave us several chances to get short in here. A fill of 143.85 was mine. I used the sweet spot simply because I was watching price action. I felt that they were going to try to sucker everyone in here to try to persuade them that this high was going to be either blown out or retested. I just wasn't buying into that, so there's the short here. First profit at 100% level, and extensions down here we'll get to in a moment. Real quick, these lows in here, okay, unable to make lower lows here, but if you look at the cable at the same time frame, okay, price was making lower lows here, so the fiber was not moving lower while the cable did. Now that right there gives you an indication that we're going to see a reaction low or bounce, and we do here. We see it there unfold, and that's the same move here. Alright, now why did it go up here and stop? Well, if you recall, we just had the fib on from the high of the Asian, the Sunday's gap opening and the Asian range lows. And here's the 62% retracement level. Stops it, puts a halt to it, trades down. Okay, now this is what we were talking about in live chat that I use while I'm in trade management. I'm looking for reasons to either tighten my stop or look to bail on the trade and just move to the sidelines. If we had this swing here and we pulled the fib down, this is a 62% retracement level we just had. Now since we had bounced up, okay, we would reasonably expect price to see a slowdown or pause here. But if you're short in something like this, you don't want to see this action. You want to see it cut through it like butter, a hot knife through butter. You want to see that type of price action, which you don't see here. So price paused, gave an optimal trade entry in here, ran up into London Open, setting up the short that we called earlier in Asia. This high had stopped resting above it. London Open or early Frankfurt typically will try to make an attempt to blow out early highs or previous day's high and usually fail. That's why we have optimal trade entry patterns that fulfill so handsomely on London Open. Okay, so now that we have this run up in here, we can go back to our original larger magnitude price swing that we're using our setup for London Open, because this is a larger swing. We retrace 62, 79% retracement level of it, and then there you go. That's where we were going. Okay, so basically smart money had accumulated here, distributed here, engineered and paired up orders to allow suckers believing that this is going to go higher. The whole time they're selling the remainder portion of their trade they accumulated here. They have no more position. Okay, they dump massive amounts of euro and drive it lower, and price was unable to even get it back up and retest this low here for Asia, and then slammed it down. Looking at the swing objectives, okay, 127, price reacted handsomely off of it here, 162, and 200% of this swing here. In other words, twice the amount, or 2 times this range here added to, subtracted to this, I'm sorry, getting ahead of myself. This range from high to low, take that pip range and subtract it from this low here, and you arrive at this level here. Obviously, I tweeted today real time and covered at 1 141.50 because I was reaching for 141.45 in here, and stabbed down, got it, and then we rejected this low here, and this happens to be a pivot. So let's put that on real quick. You can see how that unfolded. And also time of day was also a consideration because we were entering London close. We had moved down a lot, and I knew these lows in here had been already taken out. But now what really had me interested in covering at that level is if we go to a hourly chart. This was also the downward channel that Street Money would have been obviously looking at. Price opened up on Sunday, traded back down to it. Suckers are going to say, okay, we broke out of this channel, let's buy it up. And this is how they engineered the false rallies or suspect rallies that our optimal trade entry allows us to get in there and get short on while everyone else may be looking at what would be continuation patterns to them, a bull flag after a breakout. This is why I'm not a breakout artist. I trade against it, and I said this in the live chat room last night that they would bring on the pain and drive it back down into this so-called downward channel. I don't use trend lines like this, but when it's so clearly obvious, I can use this to more or less pick the pockets of the neophyte traders that use these types of breakout moves. Okay, so that was that. Now, why did I cover at 141.50 also? Because if you look at this, we're on a higher time frame, so I'm always looking at this recent price swing up. We always have to look at where our smart money going to be looking to move flows in and out of the market. Optimal trade entry right in here. Here's 79% retracement level, 62% retracement level. And if you look at my exit, it is in the lower end of the optimal trade entry range. So I was giving it some room in case we did really break down and go to this low or even lower, but I was London close was upon us, and I just basically moved to the sidelines and cut bait right there. So not bad, pretty exceptional trade. And last night I took 45 pips out of the initial drop in the euro, and playing the gap, and then obviously London Open was a early call made in Asian chat, and here was the fill. First profit, all of it off here, and to the sidelines I went, and I will be sidelined until Wednesday night going into Thursday morning London Open. And with that, guys, I wish you good luck and good trading.